Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Daria. We have with us Kunal Shah, head of Commodities Research, joining in. Kunal, welcome to the show. Currently, we've seen a range of say 90 to 90.1 coming in with regards to where the dollar index is concerned. If the dollar index breaks levels of 90, do you think there could be pressure or is there a bounce back? What's the kind of take that you have right now?
I think dollar index is going to remain under this thing. I think dollar index is going to strengthen, weaken from here, and we are going to see a further depreciation when it comes to.
You're going on mute in between.
Okay, sorry.
Yeah.
So dollar index is going to remain weak going forward today. And I think we are going to see 90 will be taken off today, which will be bullish for some of the commodities. So I'm expecting a dollar index to go below 90 and test 89, 70, 18, and 80.
Right. So with that, what do you say for this for gold and silver? Because gold prices have corrected almost 16% from their peak. And clearly, if you go to see in terms of what's happening on gold and silver, there is a steady trade. However, are you expecting any pressure, or do you think uh, the rise in US bond yields, despite the dovish stance from the US Fed Chairman Powell, they've signaled an accommodative policy for next couple of years to support the economic recovery. So with this, what's your impact that you're seeing?
I think it is bullish for gold and silver because this easy monetary policy will continue and it will continue to be there for quite a long time than anyone imagined. In fact, there is no exit strategy. The beauty about yesterday's speech was there is no clear indication when the Federal Reserve is going to end. So even though markets are almost all the markets across the world are at all-time high, all the asset prices are nearing their life highs, but then too, Federal Reserve is not indicating that they are saying that the economy remains weak, so the stimulus will continue, and hence gold silver should go up. Gold one can go long around 46,600. Upside target 46,950 to 47,000. Stop loss should be placed around 46,450. Silver looks bullish, 69,000 good levels to go long. 68,500 stop loss, and 70,100 should be the target.
Right. And with this for crude as well, today's session, crude has been trading lower. There has been a surprise build up with regards to US crude stock is concerned. Now, with this, if you see the stockpiles, they rose by almost 1 million barrels in the week to the 19th of February. How are you expecting crude from here on?
44.80 good levels to go along in crude oil. Upside target 45.40 and stop loss should be placed at 44.40. So I think looks up only. Yesterday's speech is very bullish for commodities, and I continue to stick to the bullish view for the time being. So some of the commodity fundamentally may not be bullish, but with this announcement by Federal Reserve, most of these commodities are going to go up.
Right, and will the view be the same with regards to base metals as well? Because today's session, Kunal, base metals have been weak. In fact, most of the base metals have been witnessing selling from their recent highs today. So, do you think the U.S. economic recovery with the dovish stance from Fed is something which could put pressure on base metals, or are you expecting the upward journey to continue?
Small pressure, small correction, but it will move up. Nickel 1390 one can go long, 1379 should be the stop loss, 1420 should be the target. So I'm bullish on base metals.
And what about copper? Because copper is seeing some bit of attraction as well.
Copper 712, 713 is going to be resistance. 700, 699 is a buying zone. 694 is the stop loss, and 710 should be the target. So I still remain bullish on copper.
Right, so that's a bullish view coming in on that front as well. I think there are no questions coming in, Kunal. Thank you so much, Kunal. Thank you, participants, as well, for joining in.